the Bushels and Beef Farm Tour and Podcast, where producers talk markets, share stories, and cut through the noise in agriculture.
11.5 million head on feed, placements up 4%, marketing's down 7%. The second lowest February since 1996, and yet the market didn't panic. Seth Vander Weide is back, and we're breaking down the cattle on feed report, plus the Iran war's impact on already tight beef supplies. Seth, thanks for being here.
Yeah, thanks for having me.
Definitely. So the March cattle on feed report came out on March 20th. Walk us through some of the key numbers from that report.
Yeah, I think the biggest takeaway that probably got the most notoriety was the placement was 104%. So that's usually a very bearish thing, has a very bearish sentiment to the market, and yet the market really didn't sell off. And I think probably one of the biggest underlying factors of that is when it's all said and done with our very low supply number, that only really equates to roughly about 40,000 head of cattle. So, and I think the market kind of knows that, and that's why we haven't seen a lot of pressure in the futures market yet. And obviously we haven't seen a lot of cash trade yet this week, and last week was cash trade was just okay, I would say. So I think that's the biggest sentiment right now, though, is it just really didn't have effect on the futures. So yeah,
higher placements could signal more supply coming too.
Yeah, and I think so I should have probably touched on that right away. I think I think a couple things could be happening right now, and I think with the drought that we're having out west with some of the wildfires in Nebraska, it's very plausible that we are having some extra placements in there just because we're already having extreme drought conditions already. It's probably not being talked about enough. We're not getting any rain, and there are some cattle that could have been placed in feedlots that we weren't expecting to at this point. And it's something we have to continue to monitor going forward as well, because if we're not going to be getting rain, we're going to have to do something with the cattle that are supposed to be out on pasture right now. So,
yeah. Do you want to dive in a little bit more about the market didn't tank and why not, and why it didn't?
Yeah. So, I think one of the bigger reasons why the market really didn't sell off is because of these outside factors. We are seeing the weather. Demand has been really pretty strong, and as far as the beef demand goes, up until yesterday we saw a big sell-off. I shouldn't say sell-off. Yesterday we saw a big down move in choice beef, was down $8.22 for box beef prices. I think there's a lot of up until that point, though, we had really strong box beef prices, and which usually is a very good indicator for really strong demands. Yesterday's sell off a little bit in the box beef. There could be a little bit of inventory cleaning up some inventory numbers here for box beef. We'll find out if that's the case. They're just clearing out some freezer space the next week or two. We may lose a little bit of leverage in the cash market in that short term. It's hard to know for certain if that's what's happening right now or not. We could also see box beef really bounce right back. That's going to be a wait and see type of situation here. But that's kind of how I took my initial read yesterday, was just, I think maybe we're getting up to that grilling season where we're going to start ramping up our kills. And so we need the freezer space. So,
yeah, it was nice here in Iowa the other day, and threw a couple of ribeyes on the grill and enjoyed some steaks here in late March. So taking the opportunity while we can.
Absolutely. We did the same thing at our house. So,
Yep.
Nice having an early spring for that, and hopefully everyone else is doing the same thing, going out and buying beef. So,
Yep. I wore the t-shirt today that says, eat more beef.
It's a beautiful thing.
Getting the word out. So marketing's at 1.52 million. We're the second lowest February since 1996. That's a 28-year low. Why does that matter number?
Yeah, so I guess it's a 20-year low. To me, it's kind of, it matters that it's low, but we have a low supply number. So, to me, it's not that big a deal. To me, it's a bigger deal is, are we killing the available head of cattle that we can? We're feeding them bigger, but we still need to make sure we're getting through what animals are current to be slaughtered, right? So I like to see some making sure numbers I always like to see, making sure that we are killing those, the ones that are available to us, just because we're keeping the numbers current then, and we keep the leverage then on the farmer side. So I like making sure, yes, we're making them larger, but I want to make sure we're keeping those kills current as well. We just are coming out of our tightest window too of this whole cycle, in my opinion. So I'm not surprised by those lower marketing numbers, but I also want to make sure going forward to make sure with the show list that we're running through and slaughtering the available cattle that we have. And then on the flip side, making sure we have enough demand so that we can keep these prices strong. So I mean, to me right now, the biggest worry is we've had this supply story priced into our markets now for a while, and that's why we're keeping good cash prices right now, and we'll probably are for an extended period of time. I don't know the exact time frame, no one really does, but that being said, that supply is baked into this market already. So everything else that's going to be related to the cattle market right now is going to be a demand story. And if we can keep demand strong, I think we can see some elevated prices. But if we can't, I have some real worries right now with the margins being very tight in the cattle market. There's just not a lot of profits to be made right now. Feeder cattle are expensive. Guys are willing to pay more for them because we have a shortage of them, but the prices are already elevated, so it's hard. The margins are razor thin right now. So we really need strong demand to hang in there. So, and that's what makes me the most nervous about this market.
Got it. Yeah. You kind of touched on this too. So I'm kind of answering a question, or asking a question that you kind of already answered in a way, but like, is this a supply shortage, or are feedlots holding cattle longer? I know we're talking about like bigger weights, bigger steers, but then also a little bit of supply shortage, but are the cattle there, but they're just being held longer?
I don't think the cattle are there as a whole. Are they holding longer? Yes. Are we slowing our kills down? Yes. Have we lost probably a little bit of leverage not maintaining those? And, we are having a strike in Greeley, Colorado right now. There's rumors of other places. There's wild rumors are going around that I don't really believe. So I think the biggest thing, though, is just making sure, like I said, making sure we keep that kill going, keep the slaughter going, staying current in those markets. So, I mean, I do think they're holding them longer. Yes. So I think to answer your question is yes, we're holding them longer, and yes, we have a small supply, and I think that's just kind of where we're at. So,
Yeah. We're looking at the smallest cattle herd in 3/4 of a century. There's a lot of things happening now too. You've mentioned like drought, in Texas and Oklahoma. Dan has told me, though, Texas is always dealing with drought, so maybe that's not necessarily new. But yeah, then, ranchers liquidating herds, devastating grazelands from fires and things like that. So this isn't just one bad year. Is this accumulated things over the years of how we got here?
well, yes and no. We've had some droughts in the past, and we had really good weather last year. So we had a lot of cattle out on pasture last year. And I think that led to starting some heifer retention. Now it'll be interesting to see if we can catch some rains, and if we can get catching some rains and get some moisture out west would be a huge thing for a market, because there is some heifer retention going on. It'll be interesting to see if this drought stays, how much of that continues, or if they're just going to place them in feedlots, and if they're just going to enter the system again, and that's just going to keep this supply shorter. Fortunately or unfortunately, it depends how you look at it.
Yeah.
If you're a cow calf producer, you don't mind that a little bit, probably because the prices are higher, but it does add stress to their life, though, because there is drought. You're always looking for water. You're always looking for feed. I think we all probably don't want a drought. You're at risk for wildfire then. So the only decent thing about that is the price is staying higher, and it's probably going to stay higher, potentially staying higher for a little bit longer time frame. But we're just not set up for a really good, we're going to need some rains to break this drought. That's just kind of where we're at. So,
Right. Yeah, let's talk about, we talked about the producer side. Let's touch here a little bit on the consumer side. So the number that hits consumers here right now is ground beef. In 2020, we were looking at, $3.99 a pound-ish for ground beef. It ranges anywhere from $6.74 to $7, maybe in some places. That's, a pretty big increase over the last 6 years. What's driving that, and why is ground beef specifically so vulnerable to price increases?
Yeah, unfortunately, some of that is not. Some of that is just the retailer just charges more. Sometimes that's out of our hands, right? That's just the retailer's choice. But um, lately, though, with the supply shortage, like we're talking about, there is limited supply out there. So a price increase is not uncommon when we have short supply. We have short supply cattle, which turns into a short supply of beef. So that part of it's not surprising. Then on top of that, we've had some inflation over the years. So everything is more expensive on top of that. I read something the other day in 1985, if you bought $100 worth of groceries, that $100 of groceries in today's price would be $304. And that's only at 2.75% inflation rate, right? So, and that's what we've had over the years. Yes, it's higher, but so is everything else. So, everything's relative to a certain extent.
Yeah. And I don't think beef is necessarily the consumer price index either.
No.
Some factors.
Right.
Although it seems like we're kind of like putting that as like the benchmark, it seems like now in the last year. So it's like beef is up. Like,
yeah.
This is a problem.
Well, then eggs were up for a while there. That was a huge problem. And, beef is, we're kind of picking and choosing random things, I feel like sometimes. We're just throwing darts at a dartboard, and wherever it sticks, it sticks, So I think for 6 months we were hitting beef in a row. That's kind of the way it looked. So
yeah, exactly.
Must not have been a bullseye. It must have been something else.
Yep, exactly. It must have been my 4-year-old daughter trying to hit the dartboard.
Yeah. The thing talking about that too is that's really interesting is what is this, if this Iran conflict keeps going on, what is that going to do for our beef demand? Just because if, you hear all kinds of rumors, which I try to tune most of those out, but it's kind of one of those catch-22s. You need to hear the rumors, but you also kind of need to tune them out as well. Just to see what that does, what these inflated oil prices does to our gas prices. It affects us two ways, right? On the farm, obviously our gas, oil, and fuel needs on the farm. Also then on the consumer side of things, can the demand stay strong with these inflated gas prices? And I think we can handle short-term higher, run-ups in gas prices. I don't think we can handle a 6 to 8 month shortage of fuel, where we're running gas prices up to $4, something like that, $4 or $5. And we're getting there already. We've gone up $1 in the last month. We've seen at the pumps. We can handle these short-term. I don't know if the market can handle a longer-term uptrend. But gives me a little bit of caution on the demand side as well. So.
Yep, for sure. Yeah, and I was going to jump here into the Iran war here, but you already answered my question there.
Sorry.
You're good. So yeah, kind of bringing this all back into like producer perspective and strategy. Like you work with cattle feeders primarily. What are they discussing with you right now, given these dynamics?
Yeah. So right now we're just trying to find a way to put in floors underneath their break evens, or above their break evens, I should say. Around their break evens. So just trying to find the right avenue. So we've been doing a couple different strategies here. We've been kind of layering into things. So been buying some LRP and then building a synthetic three-way around that, maybe selling some options, some call options above that to help pay for it. Some people don't like that because it kind of stops your top side a little bit, caps your top side. Have been selling some puts underneath it where maybe someone thinks they don't think the market's going to go below a certain price. And so we maybe sell a put there to help cover some of those costs. Or maybe we'll do both and just put a three-way around, and hopefully it stays in that trading range. So we've been doing that with LRP and options, and also just options on itself. So, but you can, if you have, depending what your break even is, depending what you need for income on that group. If we think there can be, you can always sell futures too, if there's a profit there. You stay in the cash market then. So if there's any positive basis, you're not out the market fully. You can do that, and then you can buy calls if you want to stay long. There's just lots of different tools that we could use. And we've been kind of, to be honest with you, we're doing the best. Like my conversations are around what's best right now in your situation. So just finding that, and everyone's situation's a little bit different in how they're thinking about things. So I have been using, at least with my clients, I shouldn't say we as a whole, I don't want to speak for anybody else, but as a whole, I've been using most of those strategies and talking through them. So
With the feedlot supplies constrained and placements up 4%, does that change the conversation at all with the producers?
not really, no. I think with like I said before, with the tight margins, I think we're just trying to find an avenue to get floors put in and try to keep some upside open just in case we have a summertime rally or something happens. If the Iran war goes away and we ease off demand and demand ramps up again and we move this market higher, we want some upside potential. No one likes to cap their income in a year. So, but we are having this conversation more and more because margins are tight right now. Cost of corn's going up, so our feed costs are going up. Feeder cattle are higher. So like I said, all these margins are tighter right now, and the tightest they've been in a while. So it's really hard to get some things locked into place. So, I mean, risk management is pretty important this year, and we're always one tweet away, one unexpected thing in a really wild world right now to moving these markets lower. So, it's just having ongoing conversations about where the market's at for us, and just ongoing, like I said, for me, I've been lagging into a lot of our positions here, just kind of waiting for the market to do something. So, I think that's always being active in the market is usually a good thing. So,
Yep. Yeah. And we were talking yesterday with Adam and just how much the headlines shake the grain markets. Do they have kind of the same effect there on the cattle, or maybe as a little bit slower?
Yeah, so they definitely do. I mean, last summer we had it a bunch of times, right? I mean, we had limit down days several times last summer, and those were all headline driven. And 3 days later, you get a headline out there, the algorithms trade now, so the algos kick it, they kick in, they start selling it off, and there's not much we can do about it. You just kind of have to wait it out. And sometimes those headlines aren't even true, or sometimes they're just, a tweet by the president, then he changes course 2 weeks later. So, I mean, you just kind of have to have, it's tough to have a thick skin right now, but with so much volatility in the market. But we've seen like that bullseye has been lifted off the beef market for a while, or at least the cattle market here since last fall. So, it's been placed on other things. So I guess is on the cattle side, I'll take it. So, but yeah, the grain markets are getting hit with a lot of news right now. So,
Anything else you want to add here or touch on?
I guess the only thing maybe I would say to everyone is just make sure make sure you're active in your risk management. Know how much know where your break evens are, know where your cost inputs, everything is, and try not to try not to get too emotional. Just make sure you use your numbers and let the numbers help you decide. And we can set trades up, set risk management up any way that we can in any style that you like, to put some protection on, leave upside open if you want to, so just, I think, have an open mind and don't, and make sure you have some coverage out there. So, because risk does happen fast. So.
Well, Seth, thanks for breaking down the cattle on feed report and explaining how all these supply factors are converging. And there's a lot affecting beef markets right now, and you're helping quite a lot of producers kind of navigate these times. So definitely appreciate your work, and I know your clients definitely appreciate it too.
Awesome. Thanks for having me.
Yeah, if you're a cattle feeder or producer and want to discuss risk management strategies in tight supply, high cost environments, reach out to Seth and the licensed livestock advisors at Logic Ag Marketing. They'll help you analyze your specific operation and discuss strategies that might fit. Don't forget to sign up for the daily marketing newsletter on the website at logicag.com. That's episode 15, and thanks for listening.